In 2026, millions of Canadian seniors could see changes to their income, healthcare access, and even banking protections. And many don't even know it yet. Some retirees may gain hundreds, even thousands of dollars, while others could accidentally lose benefits simply because they missed one small rule change. Here's the shocking part. Most of these updates won't come with a personal warning. No phone call, no letter highlighted in red, just quiet policy shifts that could directly affect your retirement. What if a simple adjustment to CPP, OAS, or tax rules changed how much money lands in your bank account every month? What if a new fraud protection law could finally shield seniors from scams or delay access to your own funds? And what about new healthcare and driver renewal rules that could impact your independence? Today, which we're breaking down 10 new Canada laws every senior must know in 2026. And trust me, number 7 is the one almost nobody sees coming. Number 1, CPP and OAS payment adjustments for 2026. If you rely on Canada Pension Plan CPP or Old Age Security OAS, 2026 brings adjustments you cannot afford to ignore. The government continues refining how benefits are calculated and indexed to inflation. And while that sounds routine, even a small formula shift can change how much money lands in your account each month. For some seniors, this could mean a modest boost. For others, especially those still earning part-time income, it could affect eligibility thresholds or clawbacks. Here's what's happening. The enhanced CPP rollout continues, meaning contribution history now plays an even bigger role in final payouts. At the same time, OAS remains tied to inflation, but rising income levels can trigger the OAS recovery tax, often called the clawback. If your total annual income crosses a certain limit, you may have to repay part of your benefit, sometimes unexpectedly. So what should you do? First, log into your My Service Canada account and review your payment breakdown. Second, if you are withdrawing from a RRIF, or earning part-time income, calculate how that affects your total taxable income for 2026. Even adjusting withdrawals slightly could help you stay below clawback thresholds. And if you're considering delaying CPP for a higher payout later, now is the time to run the numbers carefully. Think about this. When was the last time you reviewed how your retirement income is structured? A small adjustment today could mean greater financial stability tomorrow. If you found this helpful, let us know in the comments. Which benefit do you rely on most, CPP or OAS? We put a lot of effort into researching and simplifying these updates for you, so please subscribe to the channel. It's just one click, but it helps us keep creating content that protects your retirement. Number 2, Guaranteed Income Supplement, GIS, changes. If you receive the Guaranteed Income Supplement, GIS, this next update could quietly affect your monthly support, and many seniors won't realize it until payments shift. GIS is designed to help lower-income retirees, but in 2026, updated income thresholds and reporting rules mean that even small increases in income can create unexpected reductions. Here's where it gets tricky. GIS eligibility is based on your previous year's income, not your current one. So if you withdrew extra funds from your RRIF, sold investments, or earned part-time income last year, it could reduce what you received this year. Many seniors are surprised to learn that even modest one-time income spikes can temporarily lower benefits. And while adjustments are meant to reflect inflation and cost of living changes, and the calculation doesn't always feel straightforward, the system is precise, but life isn't. A temporary financial decision can echo into the next benefit cycle. So what can you do? First, review your most recent notice of assessment from the CRA. Second, if your income has dropped significantly this year compared to last year, you may be able to request a reassessment using updated income estimates. This step alone has helped many seniors restore higher payments sooner rather than waiting an entire year. Ask yourself, did you have any unusual income last year that might affect this year's benefits? If so, acting early could protect your monthly cash flow and give you more financial breathing room. If this helped you understand GIS better, tell us in the comments. Have you ever experienced a surprise reduction in benefits? We spend hours researching these updates so you don't have to. So please subscribe to the channel. It's just one click, but it helps us continue protecting seniors across Canada. Number 3, new tax filing rules for seniors in 2026. In 2026, tax filing for Canadian seniors is becoming more digitally focused, and that shift could catch many retirees off guard. While filing taxes may feel routine, new administrative updates mean more communication from the CRA will happen through online portals instead of traditional mail. If you're not regularly checking your digital account, you could miss important notices about credits, reassessments, or benefit adjustments. Why does this matter? Because many senior benefits, including GIS, OAS, and certain provincial supports, are directly tied to your tax return. A late filing, missing document, or overlooked notification could delay payments or reduce what you receive. Even something as simple as forgetting to claim eligible credits, like the age amount, medical expenses, and/or disability supports, could mean leaving hundreds of dollars unclaimed. Another important change involves verification processes. The CRA continues strengthening identity confirmation procedures to prevent fraud. That means you may be asked to verify your identity online or authorize a representative more formally than before. For seniors who prefer paper filing, it's still allowed, but delays are more common compared to electronic submissions. So what should you do now? First, ensure your CRA contact information is current. Second, consider setting up or reviewing your CRA online account, even if you use an accountant. And third, if technology feels overwhelming, formally authorize a trusted family member or a professional to monitor updates on your behalf. Ask yourself, when was the last time you reviewed your tax credits carefully? A simple review could put real money back into your pocket. Tell us in the comments, do you file your taxes yourself or do you use an accountant? We work hard to break down complicated updates into simple steps. So please subscribe. It's just one click, but it helps us continue creating content that truly supports Canadian seniors. Number 4, RRIF, withdrawal rule updates. If you have a registered retirement income fund, RRIF, 2026 could require a closer look at how much you're withdrawing each year. RRIFs are designed to provide steady income in retirement, but they also come with mandatory minimum withdrawal percentages. And even small adjustments to these rules can impact your taxes, government benefits, and long-term savings. Here's the key issue. RRIF withdrawals are considered taxable income. That means the more you withdraw, the higher your reported income. And that can directly affect benefits like OAS and GIS. If your total income crosses certain thresholds, you could trigger clawbacks or reduce supplements without even realizing it until the next payment cycle. In recent years, while the government has adjusted minimum withdrawal factors to reflect longer life expectancy and economic conditions. In 2026, seniors should pay special attention to how these percentages interact with inflation and investment performance. If your portfolio had strong gains, withdrawing the minimum could still push you into a higher tax bracket. On the other hand, withdrawing too little beyond the minimum might leave unused tax planning opportunities. So what's the smart move? First, calculate your projected total income before making withdrawals. Second, consider spreading withdrawals strategically throughout the year instead of taking one large lump sum. And third, consult a financial advisor to explore income splitting options if applicable. And think about this. Are you withdrawing money in a way that supports your lifestyle or unintentionally increasing your tax burden? A few smart adjustments now could mean more stability and less stress later. In the comments, tell us, do you take your RRIF withdrawals monthly, yearly, or as needed? We put real effort into researching and simplifying these updates. So please subscribe. It's just one click, but it helps us continue protecting your retirement future. Number 5, new pharmacare and prescription coverage changes. In 2026, changes to Canada's evolving pharmacare framework and provincial drug programs could directly affect what you pay at the pharmacy counter. While many seniors already receive prescription coverage through provincial plans, new federal-provincial coordination efforts aim to standardize certain medications and expand coverage. But transitions like this can create confusion. Here's why this matters. As drug pricing agreements shift and formularies update, some medications may move tiers, require new approvals, or have adjusted copay amounts. Even a small copay increase multiplied over several prescriptions each month, can quietly raise your annual healthcare costs. And if you rely on specialty or brand name medications, a changes in preferred coverage lists could mean switching to a generic equivalent. Research consistently shows that medication adherence is strongly linked to affordability. When costs rise even slightly, people are more likely to delay refills, which can lead to larger health issues down the road. That's why staying informed isn't just about saving money, it's about protecting your long-term well-being. So what should you do now? First, request a current medication review from your pharmacist. Ask whether any of your prescriptions are expected to change coverage status in 2026. Second, verify whether you qualify for additional provincial senior drug benefits based on income. And third, keep a printed list of medications and coverage details for quick reference. To ask yourself, when was the last time you reviewed your prescription coverage instead of simply renewing it automatically? Comment below, have your prescription costs increased in recent years? We invest hours researching these updates so you stay protected. So please subscribe. It's just one click, but it truly helps us continue creating valuable content for seniors like you. Number 6, driver's license renewal and medical screening updates. For many seniors, a driver's license represents more than transportation. It represents freedom, independence, and dignity. But in 2026, several provinces are tightening renewal procedures for older drivers, introducing updated medical reporting requirements and more structured screening processes. Now, this doesn't mean seniors are automatically losing their licenses. In fact, research consistently shows that many older drivers are cautious and experienced. However, provincial regulators are placing greater emphasis on vision testing, cognitive awareness, and reaction time assessments at certain age milestones. Some provinces may also require physicians to report specific medical conditions that could impact driving ability. Why does this matter? Because missing a renewal deadline, incomplete paperwork, or failing to prepare for required testing could result in temporary suspension. And for seniors living in suburban or rural areas, losing the ability to drive, even briefly, can dramatically affect daily life. So what can you do now? First, check your province's renewal timeline and confirm when your next renewal is due. Second, schedule regular eye exams and discuss any medical concerns with your doctor well before renewal time. Third, consider refreshing your skills with a voluntary senior driving course. Not because you have to, but because confidence behind the wheel matters. Ask yourself, if your renewal notice arrived tomorrow, would you feel fully prepared? In the comments, tell us, how important is driving to your daily independence? And we carefully research these updates to help you stay informed. So please subscribe. It's just one click, but it supports the effort we put into every video for you. Number 7, new digital banking and fraud protection law. This is the one almost no one is talking about, yet it may affect every senior with a bank account in 2026. Canada is strengthening consumer banking protections to combat rising financial scams, especially those targeting older adults. On the surface, this sounds like great news, and in many ways it is. But there's a surprising twist. Under updated fraud protection rules, banks now have expanded authority to temporarily freeze accounts if suspicious activity is detected. The goal is to stop scams before money disappears. Considering that seniors are among the most targeted groups for fraud, these protections are designed to prevent devastating losses. Research from fraud prevention agencies consistently shows that early intervention dramatically reduces financial damage. But here's where it gets serious. If your bank flags a transaction, even when you authorized, your account access could be restricted while they investigate. That means delays in accessing your own funds. Imagine needing to pay a bill or transfer money only to find your account temporarily locked. So what should you do? First, make sure your bank has your updated phone number and email so they can quickly verify suspicious activity. Second, set up transaction alerts so you're informed instantly. Third, talk to your bank about adding a trusted contact person for extra security. And most importantly, never share verification codes with anyone, even if the caller claims to be from your bank. Ask yourself, if your account were frozen tomorrow, would you know exactly what steps to take? Now we're curious. Have you ever received a suspicious banking call or message? Share your experience below so others can learn. We put real effort into protecting seniors with accurate updates, so please subscribe. It's just one click, but it helps us keep creating content that truly matters. Number 8, home renovation and accessibility tax credit expansion. If you've been thinking about installing grab bars, widening doorways, adding a stair lift, or upgrading insulation, 2026 may be the perfect year to act. Expanded home renovation and accessibility tax credits are giving seniors more financial support for safety and energy efficiency improvements. And this isn't just about comfort. It's about protecting your independence while reducing long-term costs. Governments are increasingly encouraging seniors to age in place, and research shows that living safely at home improves mental well-being and reduces healthcare strain. That's why updated credits may now cover a broader range of mobility aids, bathroom modifications, and energy-saving upgrades like improved windows or heat pumps. Some provinces are also increasing rebate amounts or simplifying application steps. But here's what many seniors miss. These credits require proper documentation. Receipts must clearly outline eligible expenses, and some upgrades may require professional installation to qualify. If paperwork is incomplete, claims can be delayed or denied. So what should you do? First, review which renovations qualify before starting. Second, request detailed invoices from contractors. Third, keep a dedicated folder, physical or digital, for all renovation paperwork. A small organizational step today could mean significant savings at tax time. Ask yourself, is your home set up to support you comfortably for the next 10 years? Tell us below, have you made any home upgrades recently? And we spend hours breaking down these changes into simple steps. So please subscribe. It's just one click, but it helps us keep delivering valuable updates for you. Number 9, long-term care and home care regulation. Updates for seniors and their families. Few decisions feel as important as choosing the right care. In 2026, updated long-term care standards and home care regulations aim to improve transparency, staffing accountability, and quality monitoring across facilities. While many changes are designed to raise standards, they also require families to be more informed and proactive. New reporting frameworks may require care homes to publish clearer inspection results and staffing levels. Some provinces are strengthening background checks and training requirements for care workers. These updates respond to years of research showing that higher staffing consistency improves both safety and emotional well-being for residents. Kimmy, but here's the reality. Not every family knows where to look for inspection reports or how to interpret them. And during stressful transitions, paperwork can feel overwhelming. So what can you do now? First, research facilities using official provincial websites before making commitments. Second, ask direct questions about staff to resident ratios. Third, review contracts carefully, especially regarding fees and services included. Being informed isn't just smart, it's protective. Ask yourself, if you or a loved one needed care tomorrow, would you know what questions to ask? In the comments, share. Have you or a family member experienced long-term care? What advice would you give others? We put tremendous effort into making these guides clear and helpful. So please subscribe. It's just one click, and it truly supports the work we do for seniors like you. Number 10, estate planning and power of attorney updates. This final update may not feel urgent, but it could become the most important legal decision you make in 2026. Across Canada, evolving estate and digital asset regulations are prompting stronger documentation standards for wills, power of attorney, and executor responsibilities. And many seniors don't realize their current documents may be outdated. Here's the issue. Life changes, laws evolve, but paperwork often stays the same. If your will was written 10 or 15 years ago, it may not reflect new rules regarding digital assets, joint accounts, or beneficiary designations. Some provinces are tightening witnessing requirements or clarifying how electronic records are validated. That means an improperly updated document could face delays in probate, or worse, disputes among family members. Research consistently shows that unclear estate documents are one of the leading causes of family conflict after someone passes. And sadly, those conflicts can erase the peace of mind you worked your entire life to create. So what should you do now? First, review your will and power of attorney documents with a qualified legal professional. Second, ensure your executor knows where the originals are stored. Third, include digital assets, online banking, social media, subscriptions. In your planning, the world has changed, and your estate plan should reflect that reality. Ask yourself honestly, if something happened tomorrow, would your family have clear instructions or confusion? Taking action now isn't about fear. It's about leaving behind clarity, protection, and dignity. Before you go, tell us in the comments, when was the last time you updated your will? We dedicate serious time and research to creating these guides, so please subscribe. It's just one click, but it helps us continue protecting and informing seniors across Canada. As you can see, 2026 is not just another ordinary year. From CPP and OAS adjustments to new banking protections, healthcare updates, tax rules, and estate planning changes, these laws have one thing in common. They directly impact your money, your health, and your independence. And here's the truth. Most of these changes won't make headlines. They won't come with flashing warning signs. But small adjustments in income thresholds, withdrawal rules, or documentation requirements can quietly affect your retirement lifestyle. Sometimes positively, sometimes negatively. The difference often comes down to one simple thing: awareness. The good news? You are already ahead. By watching this video, you've taken an important step toward protecting your future. Think about it. A quick review of your benefits, a conversation with your bank, updating your tax information, or reviewing your will could prevent unnecessary stress later. These aren't dramatic actions. They're smart ones. Let me ask you something. Which of these changes surprised you the most? And more importantly, which one are you going to review first? If you found value in this breakdown, make sure you like this video, subscribe to the channel, and turn on notifications so you never miss an important update. We create these videos to help seniors across Canada stay informed and confident in a changing world. And remember, while this information is carefully researched and designed to guide you, it is always wise to consult qualified financial, legal, or healthcare professionals for advice specific to your situation. Your retirement years should be about security, clarity, and peace of mind, and staying informed is one of the most powerful tools you have.